Job openings coming in at 8.76 million for the month of February. That is above the 8.73 million that was expected. For more on this, we have Jennifer Lee, BMO Capital Markets Senior Economist. Thank you so much for being here with us, Jennifer. We really appreciate it. It seems like the market was already kind of digesting and using the ISM data from yesterday as a move towards the downside, or at least as a potential catalyst towards the downside. Help me understand whether or not that is also going to have an impact on the Fed. How big of a deal is this latest ISM data going to be come the next Fed meeting?
So good morning, and thank you for having me on. I mean, I think it's not just the ISM, it's all of the data in its totality that will have an impact on the Federal Reserve. And what I got to say, after the job openings data this morning, my first reaction, to be honest, was to say, what? They rose again? And that's a reaction I haven't had in a few months. But, overall, it was a very mixed report. It was all on the public sector side. The private sector was actually cutting back. By industry, I believe the sector was on an industry basis, it was a little bit mixed. So overall, it still shows that not a huge change in the labor market and labor market conditions. No, probably no impact of anything for what the Fed is thinking or what they're thinking already. So I think it's just going to be, again, the totality of the data. ISM numbers, by the way, as you're mentioning, were also very a little bit of a surprise. Expanding for the first time in months, and even the survey respondents' comments were very positive. I think for the most part, and I tend to put a little bit more weight on what they're actually saying than sometimes the figures themselves.
We've talked a lot today specifically on this program about some of the labor market numbers that we got today and also looking ahead to Friday. I'm also interested in what you're thinking about inflation. The next CPI report comes out before PCE. We've seen a lot of indicators and now the year over year numbers have kind of stalled out. We've seen Supercore, ex-housing, that is maintained above 4%, I believe. Just when do you expect to have some kind of definitive answer on the Fed's inflation target? Is the 2% ever going to be in sight, or are we at risk of accelerating to the upside once again?
I believe it is going to be coming in sight. Is just the question is how long is it going to take? If it starts to re-accelerate again or accelerate again, I think that's where we're going to have some other issues. But as Fed Chair Powell said, they're not going to get too excited about a couple of months of sticky inflation numbers like January and February, just like they didn't get too excited over a couple of months of better inflation reports last year. So I think we're going to need at least probably like I'm going to say 3 or 4, perhaps, better inflation data to make the Fed more comfortable, more confident that inflation is getting back to that 2% rate. And that kind of falls in nicely with our expectation for the first Fed rate cut to come in July. Although sometimes when I'm looking at this data, sometimes I'm thinking, they could be waiting a little bit further, a little bit later than that. But we'll have to see how that fares.
Did today's JOLTS data change that narrative for you?
No, frankly, no. I mean, plus, as you mentioned earlier, just at the start of the hour, that this is also lagged data. But overall, yes, it was, its openings were up, but it was all public sector. It was mixed among the industries themselves. But it shows, Fed Chair Powell has had like a whole host of phrases that he's been using to describe the labor market. What did he say recently? Like he doesn't see cracks in the labor market. It's still strong. It's coming into better balance, which is another way to say that everything is equaling out. So I don't think he's as worried about the job market. And again, of course, he wants it to cool off a little bit more, but he's not worried about having it, decelerate sharply. He's probably more interested in the overall inflation picture, especially on the PC and the core PC deflator.
Nice shout out to the Powell phrasebook there. I want to talk about another central bank, and that's the Bank of Japan. You're noting in your note to us here about foreign exchange, about the move that the yen has made, weakening to the weakest level against the dollar, something like 30, 40 years. Now, the BOJ recently raised rates, but it seems the market is calling the BOJ's bluff. Whenever they say something, we get a little bit of a market reaction, but it's quickly walked back here. So how do you see the situation with the BOJ? How does that, develop?
That is a tough one. They finally, came up and, finally raised rates, as we all know at this point. Unfortunately, they sort of washed it all out by saying, that rates are going to, or policy is going to stay accommodative for a long time. And by the way, we're still buying JGBs. And plus, I think from the minutes or from the summary of opinions, it looked like a lot of the members, even though they all pushed for this rate hike, they also want to make sure that that everyone knows that they're going to stay accommodative for a long time. So they sort of, gave with one hand and took away with the other. And that did not help the currency at all. And of course, now you've got the Fed still dealing with a strong economy, a very resilient economy. And it looks like, and then so now there's potential for maybe the Fed could, have fewer rate hikes and push it off a little bit further into the distance. So of course, that's going to boost the US dollar and with the Bank of Japan and the Ministry of Finance, even with the Ministry of Finance, jawboning and saying that we're not going to, that we will intervene if we have to. That's not doing the yen itself any favors, especially I think from the policy front from the Bank of Japan.
Yes, well, thank you for that, and we'll be on pins and needles here. Jennifer Lee, BMO Capital Markets Senior Economist.